Welcome to the definitive, step-by-step blueprint for building an unstoppable financial engine that will empower you to retire decades before your peers and permanently reclaim your time. Achieving financial independence is not about winning the lottery, securing a massive inheritance, or picking the perfect speculative stock based on internet rumors. Instead, early retirement is entirely about understanding fundamental market mechanics and consistently applying simple, undeniable mathematical principles over a long period of time. The absolute first step to early retirement actually has nothing to do with numbers at all, but rather with mastering the psychological aspects of finance, such as risk management and the impact of media cycles on individual behavior. Every single day, you are bombarded by a chaotic news storm designed by media corporations to trigger fear, uncertainty, and highly impulsive financial decisions. To succeed in building long-term wealth, you must develop the mental fortitude to tune out the daily market panic and focus entirely on your personal long-term asset growth. Imagine being able to sit peacefully and maintain your strategic vision, completely unbothered, while amateur investors around you panic over the latest economic headline. This psychological edge is achieved by utilizing mental noise-canceling headphones against news storms, allowing you to separate real economic signals from temporary media hysteria. Once you have built that psychological shield, you must define exactly what early retirement looks like for your specific lifestyle and personal goals. This is the phase where we calculate your ultimate target, widely known in the community as your financial independence, retire early, or FIRE number. The most common baseline for this calculation is the 4% rule, which mathematically assumes you can safely withdraw 4% of your total portfolio value each year. To find this monumental target number, you simply take your carefully estimated annual living expenses in retirement and multiply that figure by 25. If you plan to live a very comfortable lifestyle that costs $80,000 a year, your ultimate portfolio target is exactly $2 million. Staring at a multi-million-dollar goal as a beginner can feel incredibly overwhelming, making you feel like the mountain is simply too high to climb. However, you must realize that you do not have to save every single penny of that $2 million strictly through your own physical labor and wage earnings. The heaviest lifting in your portfolio will actually be done by the eighth wonder of the world, which is the undeniable mathematical phenomenon of compound interest. Compound interest is the magical process where the money you invest generates earnings, and then those new earnings are reinvested to generate even more earnings on top of themselves. In the beginning of your journey, the growth of your investments will feel agonizingly slow, testing your patience as the math slowly begins to work in your favor. But as decades pass, that initial capital accumulates mass at an accelerating rate until it becomes an entirely unstoppable avalanche of generational wealth. To get this wealth engine started, your second major step is to ruthlessly and dramatically increase the gap between what you earn and what you spend. This vital metric is known as your savings rate, and it is the single most powerful lever you control during the early accumulation phase of your journey. Cutting out unnecessary luxury expenses and subscription bloat is important, but true velocity is achieved when you focus heavily on increasing your primary income stream. Expanding your earning potential might require you to aggressively negotiate a raise, acquire high-income technical skills, or launch a highly scalable side business. Every extra dollar you earn must not be used to inflate your lifestyle, but instead channeled directly into your investment accounts to purchase income-producing assets. Now, let us dive into the actual underlying mechanics of where you should be putting this hard-earned surplus capital to ensure it multiplies effectively. Leaving large amounts of uninvested cash in a standard commercial savings account is a guaranteed mathematical certainty that you will slowly lose your purchasing power. This silent loss is due to the hidden tax of inflation, which constantly eats away at the value of fiat currency year after year without you noticing. Instead of hoarding cash, you need to completely transition your mindset from being a consumer of goods to becoming a long-term owner of productive, global assets. The most reliable and battle-tested vehicle for the average person to build immense wealth is the stock market, specifically through low-cost, broad market index funds. When you buy a share of an S&P 500 index fund, you are essentially buying a microscopic, diversified piece of the 500 largest companies in the economy. By doing this, you are acquiring modern-day stock certificates that legally entitle you to a massive share of global corporate profits without having to do the work yourself. Historically, the global stock market has delivered an average return of 8 to 10% per year over long time horizons, creating massive wealth for patient investors. It has maintained this incredible upward trajectory despite facing numerous severe crashes, global recessions, and completely unpredictable geopolitical crises over the last century. Deeply understanding this historical context helps you weather the inevitable storms of market volatility that routinely scare so many amateur, emotional investors out of their positions. A severe market correction is absolutely not a signal to sell your precious assets in a panic, locking in your losses permanently out of sheer terror. In reality, an economic downturn is simply a massive clearance sale where you are presented with a rare opportunity to acquire more shares at a heavy discount. Institutional investors and the ultra-wealthy thrive during these exact market downturns because they possess the capital and the strict psychological discipline to buy when there is blood in the streets. To master early retirement, it is also highly crucial to understand how broader economic policy directly impacts your portfolio and the overall cost of living. The central banking system, most notably the Fed, plays a massive role in shaping this macroeconomic landscape by controlling interest rates and managing the total money supply. When the Fed deliberately lowers interest rates, borrowing capital becomes much cheaper, which typically stimulates rapid corporate expansion and drives stock prices significantly higher. Conversely, when inflation runs dangerously hot and the Fed is forced to aggressively raise interest rates, markets often experience violent turbulence as the cost of capital becomes expensive. However, your long-term wealth blueprint should never rely on trying to perfectly time these complex, unpredictable macroeconomic cycles or guessing what the central bank will do next. Instead, your ultimate strategy must be consistent dollar cost averaging, which simply means investing a fixed, predetermined amount of money at regular intervals regardless of what the market is doing. By mechanically investing the exact same amount every single month, you naturally buy fewer shares when prices are inflated and more shares when prices are incredibly cheap. Over a period of 10 or 20 years, this unemotional, mathematical approach beautifully smooths out the market's peaks and valleys, securing a highly favorable average purchase price. Step 4 of your financial independence journey involves meticulously optimizing your tax strategy to ensure you keep as much of your investment growth as legally possible. Aggressively utilizing tax-advantaged vehicles like a 401k, a Roth IRA, or a highly flexible health savings account is an absolute necessity for aspiring early retirees. Contributions made to traditional retirement accounts immediately reduce your taxable income today, allowing you to invest heavy capital that would have otherwise gone straight to the government. A Roth IRA, on the other hand, allows your investments to grow completely tax-free over decades, meaning you will owe absolute zero in taxes when you withdraw the funds. Deeply understanding the specific contribution rules, withdrawal penalties, and clever conversion strategies for these accounts is a complex but incredibly rewarding hurdle to clear. One highly popular method for accessing this money early is the Roth conversion ladder, which allows you to extract funds from traditional accounts long before the standard retirement age. This brilliant strategy involves gradually converting money from a pre-tax account into a Roth account every year, creating a pipeline of accessible, penalty-free money 5 years in the future. As your asset base swells into the millions and you rapidly approach your target FIRE number, your focus must gently shift from aggressive accumulation to capital preservation. This is the critical stage where you might begin deliberately incorporating bonds or dividend-paying assets into your portfolio to severely reduce volatility and sleep better at night. Establishing a deeply balanced portfolio ensures that a sudden, severe global market crash occurring right before your retirement date does not completely incinerate your plans. Furthermore, establishing a highly substantial cash reserve or emergency fund becomes exponentially more critical as you prepare to walk away from your primary, bi-weekly paycheck forever. Having 1 to 2 full years of living expenses securely sitting in a high-yield savings account provides an unbelievable level of psychological safety and total peace of mind. This deep cash buffer entirely prevents you from being forced to sell off your stock market assets at the worst possible time during a severe bear market panic. It allows you to weather the economic storm completely unbothered, giving your equities the essential time they need to naturally recover and continue compounding upwards. Step 5 is arguably the hardest part of the entire financial independence process, and that is simply exercising extreme, unwavering patience over a very long period of time. Building genuine, life-changing generational wealth is not a rapid overnight event. It is a beautifully slow, highly methodical grind that requires years of immense personal discipline. There will absolutely be entire years where your portfolio seems entirely stagnant, brutally testing your resolve and tempting you to abandon your well-crafted strategy entirely. You will be forced to watch your friends and colleagues drive brand-new luxury cars and take lavish exotic vacations financed entirely by crippling consumer debt. During these intense moments of social doubt, you must deeply remember exactly why you started this difficult journey and visualize the ultimate, absolute freedom that awaits you. You are consciously choosing to sacrifice a very small amount of temporary, superficial luxury today in order to purchase complete, undeniable sovereignty over your time tomorrow. Time is the only truly non-renewable resource we possess as human beings, and ultimate wealth is defined entirely by having the freedom to choose how you spend every hour. Whether you passionately want to travel the globe, start a risky passion project, or simply spend totally uninterrupted time with your family, financial independence makes it your reality. When you eventually hit that magic fire number, the massive psychological transition from aggressively accumulating to slowly withdrawing can feel incredibly strange, unnatural, and terrifying. It requires a profound shift in mindset to stop rigidly hoarding cash and to begin fully trusting the mathematical machine you have spent the last decade painstakingly building. You will officially submit your formal resignation letter, stepping off the corporate treadmill and walking out of those office doors for the very last time in your life. At that exact moment, you are no longer a dependent employee trading your precious hours for dollars. You are a fully autonomous individual living completely off the harvest of your capital. To review this entire comprehensive blueprint, it all fundamentally starts with cultivating the unshakable psychological discipline to aggressively ignore market noise and modern consumers' pressures. Next, you must carefully determine your exact destination by meticulously calculating your personal financial independence number based on your highly specific projected annual expenses. From there, you ruthlessly and surgically optimize your monthly budget to widen the critical gap between your income and expenses, thereby maximizing your overall savings rate. You funnel that incredible surplus capital aggressively and relentlessly into broad market index funds, actively buying fractional ownership stakes in the world's most powerful and profitable corporations. You cleverly utilize powerful tax-advantaged accounts to legally shield your growing wealth from government friction, massively accelerating the ultimate timeline of your compound growth. You maintain an absolute, unwavering commitment to dollar-cost averaging, continuing to blindly buy high-quality assets whether the market is reaching euphoric record highs or experiencing terrifying, bloody lows. You keep a watchful, intelligent eye on macroeconomic trends like the highly influential actions of the Federal Reserve, not to panic, but simply to deeply understand the broader financial landscape. As you slowly near the very peak of the mountain, you strategically adjust your risk profile, introducing reliable fixed income assets and large cash buffers to fiercely protect your hard-earned progress. Finally, you boldly execute the massive transition with supreme confidence, wholly trusting the math, deeply embracing your new reality, and claiming the ultimate prize of early retirement. This incredible path is completely open to absolutely anyone who is willing to humbly learn the strict rules of the game and endure the temporary discomfort required to win it. The underlying math is beautifully and elegantly simple, but the flawless execution requires a level of intense focus and mental fortitude that very few modern people are willing to develop. One massive hurdle that heavily derails many early retirement plans is the critical failure to accurately account for the rapidly rising cost of healthcare in your later years. Because you will be purposefully leaving your employer-sponsored health insurance plan long before government Medicare kicks in, you must meticulously budget for private health insurance premiums. Aggressively utilizing a health savings account during your highest earning years can brilliantly create a dedicated, entirely tax-free bucket of money specifically reserved for these future unavoidable medical expenses. Another incredibly powerful and proven tool for massively accelerating your path to complete financial independence is the strategic, calculated use of cash-flowing real estate investing. While the global stock market provides brilliant, frictionless liquid returns, acquiring physical rental properties offers the incredible dual benefit of monthly cash flow and long-term property appreciation. Buying your first house and aggressively house hacking by renting out the extra bedrooms is a truly fantastic way to dramatically and immediately reduce your largest monthly living expense. Over time, you can steadily acquire multiple cash-flowing properties, allowing your tenants to effectively pay down your heavy mortgages while you simultaneously build substantial, tax-advantaged equity. However, being a landlord is absolutely not an entirely passive endeavor, so you must carefully weigh the administrative headache of real estate against the beautifully frictionless nature of index funds. Regardless of whether you lean heavily towards physical real estate or liquid paper assets, the absolute worst enemy of your progress is always the silent, invisible thief known as inflation. Inflation steadily and ruthlessly erodes the true purchasing power of your dollars, meaning the $1 million you save today will buy significantly less actual value 20 years from now. This mathematical reality violently forces you to keep the vast, overwhelming majority of your net worth invested in productive, appreciating assets rather than stagnant, slowly dying fiat currency. Alongside the rigorous mathematical challenges, you will inevitably face immense social pressure, profound confusion, and heavy skepticism from friends and family who simply do not understand the FIRE movement. Normal people will relentlessly question why you drive an older, reliable car, why you skip expensive dinners, and why you are so remarkably obsessed with your financial spreadsheets. It is completely normal and entirely expected to feel deeply isolated when your disciplined lifestyle choices drastically diverge from the toxic, hyper-consumerist culture that aggressively surrounds us all. This is exactly why actively finding a strong community of like-minded individuals, whether heavily active online or meeting locally in person, is so critical to maintaining your daily momentum. Surrounding yourself heavily with people who deeply share your core values will powerfully validate your difficult efforts and provide a brilliant sounding board for your complex financial strategies. As you progress further, you will experience massive, pivotal milestones that serve as incredible psychological boosts, like finally crossing the legendary first $100,000 mark. Charlie Munger famously declared that accumulating that first $100,000 is by far the hardest part, but you must do it, even if it requires brutal, uncomfortable sacrifice. Once you cross that initial agonizing threshold, the immense power of compound interest begins to violently take on a life of its own, accelerating your wealth accumulation completely exponentially. You will eventually and triumphantly reach a deeply comforting mathematical point known as coast FIRE, where your existing portfolio is large enough to grow to your retirement goal entirely on its own. Reaching coast FIRE means you can instantly and safely drop your aggressively high savings rate to absolutely zero, immediately freeing up massive amounts of cash flow to enjoy your present life. Alternatively, you might decide to pursue barista FIRE, where your portfolio flawlessly covers your core living expenses, but you choose to work a highly enjoyable, low-stress part-time job. The absolute beauty of building a truly substantial financial runway is that it generously provides an infinite spectrum of glorious options rather than a brutal binary choice between grinding and quitting. True, undeniable financial independence is absolutely not about sitting lazily on a beach doing absolutely nothing for 40 years, which actually leads to severe boredom and deep depression for ambitious people. Instead, the ultimate goal is about having the supreme luxury and unmatched power to design a life centered entirely around your deepest passions, your grandest purpose, and your ongoing personal growth. You can confidently afford to take massive entrepreneurial risks, write a book, volunteer for deeply meaningful causes, or simply raise your children entirely without the looming, terrifying threat of financial ruin. To completely solidify and lock in this life transformation, it is highly recommended to aggressively automate every single moving aspect of your financial life to completely eliminate the need for daily willpower. Set up strict, automatic transfers so that the exact millisecond your paycheck hits your checking account, your designated investments are immediately fully funded before you can spend a dime. By entirely removing human emotion, psychological hesitation, and daily laziness from the mechanical process, you mathematically guarantee that your wealth-building engine runs flawlessly in the deep background month after month. Start treating yourself completely as the master architect of a beautiful, highly efficient machine. Once the complex blueprints are perfectly drawn and the gears are securely in place, the machine does the hard work. Remember deeply that painful setbacks are absolutely inevitable, whether it is an unexpected, massive medical bill, a sudden, unfair job loss, or a massive, completely unpredictable global economic downturn. Your fully funded emergency cash fund acts strictly as the heavy-duty shock absorber for these completely unavoidable life events, keeping your long-term, compounding investment strategy entirely untouched and perfectly intact. Do not ever let temporary, short-term setbacks permanently derail your magnificent long-term vision. Simply absorb the harsh impact, quickly recalibrate your strict budget, and get immediately back on the relentless path. Every single major step and strategy we have intensely discussed today is entirely within your ultimate control, provided you have the fierce discipline to ruthlessly execute the blueprint. Your current, possibly depressing financial situation, no matter how dire or impossible it may currently seem, is merely the temporary starting line of your race, not your permanent, final destination. The incredible, life-altering journey to early retirement officially begins the exact moment you firmly decide that your future, undeniable freedom is vastly more important than your fleeting present comfort. Take out a sharp pen, clearly write down your target FIRE number, and aggressively outline the specific, actionable steps you will take this exact week to dramatically increase your savings rate. Thank you for watching this ultimate financial blueprint, and always remember that building immense wealth is absolutely not magic. It is simply flawless math, unrelenting discipline, and an incredible amount of long-term patience.